Pension systems, they are always so focused on return. Retirees pay into that system and they expect their benefits. In today's world, how important is sustainability and ESG when it comes to investments in your portfolio?
Sure. And first I'll say, Frank, thank you for hosting LACERA. Thanks for having a fantastic event. And the direct answer to the question is that nothing's changed. Nothing's changed in that we remain 100% focused on generating returns that are durable, sustainable to meet the retirement needs of our 180,000 members.
So when we talk about those sustainable returns and ESG, is there one of those three letters that's more important? Is it the environmental? Is it the social? Is it the governance when you're looking at the companies that you're investing in?
Sure. And it varies by industry, by opportunity. We have really expanded the aperture of how we underwrite an investment, how we underwrite a business partner, and ESG considerations are part of every single investment that we make. And we view ESG considerations or responsible stewardship as really economic risks and a process that is critical to, once again, generating those returns for our members.
So No, I'm sorry, I cut you off, Jonathan. Please continue.
Yep. Oh, no, I was just going to say, sorry for speaking over you, is that it varies by industry. There's some industries where S may be more relevant, where E may be more relevant, but maybe the one that is most relevant or consistently relevant is just governance, that we need to have good governance to navigate markets and conditions that continue to evolve, and maybe the pace of that evolution quickens.
You know, you're talking about aperture, great metaphor. So really paint us a picture of how you're navigating, because more and more people want to spend their money with companies aligned with their beliefs and their principles. Do you get feedback from your members about certain investments, and how do you balance that with the need to generate returns and keep up with the rising cost of living and the rising cost of healthcare?
Yeah, and I think that those issues may vary by member. You know, we have 180,000 active and retired members, so I don't want to say that there's one issue that's more important for everyone. I think we're focused on what's important for the entirety of the system, and I'll give a lot of credit. And once again, you know, we take our own medicine as it relates to good governance, in that our board established investment beliefs maybe 7-8 years ago. We refreshed those beliefs last year, and those beliefs really are persistent and allow us to continue to, once again, focus on that widened aperture and navigate through the situations in order to, once again, generate returns that are sustainable and durable.
Can you give us a sense of some of those beliefs, those principles that are guiding your investments right now?
Sure, and those beliefs are they vary, or they're principles-based rather than rules-based. And those principles include things such as that risks are dynamic, and that we have to factor in different risks in different market environments. And some of those risks are relate to ESG considerations. Another one of those beliefs is that diversity matters, that diverse, equitable, and inclusive teams will outperform. Hence, it's our fiduciary duty to make sure that we are marshaling the best talent to manage our portfolio.
Okay. When you talk about diverse, is that gender diversity, ethnic diversity, and how do you balance those two things? There's a lot of pushes for more gender diversity on boards of companies and things like that, and at the same time, there's a push for more ethnic diversity when it comes to C-suites and boards.
Sure, and I would say maybe it's both and all the above, and the focus really being on best, and that we once again believe that diverse, equitable, inclusive teams will outperform. And in order to have those teams, be it on boards or be it portfolio company management or investment managers, that you should identify talent, make sure that talent advances throughout from the pipeline all the way through to the boardroom and ownership by recruiting from 100% of the population, not a subset. And an example is we've partnered with some peers in California, some other public pension plans, to reach out to some public companies that have lacked diversity on their board and really encourage them to construct the best boards, to make sure that they have board members with requisite talent that understand the industries for the companies for which they're overseeing. So it really is focused on the best, and the best comes from casting that wide net.
So it sounds like you really focus on engagement with the companies in your portfolio as opposed to divesting from those companies.
Absolutely. We do not have a divestment mandate. We engage. We've expanded our proxy voting from 10% of the shares that we've held about 5 years ago to now we vote over 90% of those proxies by bringing it in-house. So we absolutely engage, and it's not just in public markets, but it's in private markets where we serve on limited partner advisory committees and really try to agitate and push our business partners and the companies to get the best outcomes for all stakeholders.
It almost sounds like you're an activist investor in that sense.
I don't know if I would say that we're activists in terms of a specific label. I would say that we try to perfect our craft. And we have a strategic plan entitled Allocator to Best-in-Class Investor. So we view ourselves as an investor with a mindset of continuous learning. And we want to, I would say maybe we have a duty to agitate, to be activists, lowercase a, and that's by, once again, engaging with partners. It's finding like-minded investors, and it's even writing letters to policymakers and regulators.
Very interesting. So can I ask you a few macro questions? Rising rates are another issue that you have to manage. So according to the CME, there's now an 85% chance of a quarter-point rate hike when the Fed meets in about 2 weeks. That will bring rates to their highest level since August of 2007. How has that shaped your investments when it comes to stocks?
Wow. I think that the changing market environment with higher interest rates potentially changes everything. It changes how investors like LACERA think about allocating capital. And we're going through an exercise this summer where we're going to revisit our strategic asset allocation, which is how we apportion investments between stocks, bonds, real estate, real assets. And to the extent we're trying to get 7%, which is a threshold return, and we can get more of that through safer fixed income investments, well, that may change the amount of capital we have in riskier, complex, equity-like instruments. And then that flows through the whole economy, which is something that we're very mindful of, in that as investors have less capital in riskier investments, well, that potentially changes how corporations need to allocate capital. And maybe going full circle back to sustainability is that really raises the demand, the need, the requirement for boards that are focused on excellence, because boards have to understand what their duty is and where their access to capital is.
So part of your portfolio, I'm taking a look at it right now, part of it is actually credit and, as you mentioned, real assets. This is often referred to as alternative investments. Give us a picture of how you're investing in those spaces with a focus on sustainability.
Sure. And one very clear example is in our real assets portfolio. We've had significant investment in energy transition. Energy transition includes the minerals and natural resources necessary for that sustainable future. So that's a really easy example. We've focused on transition assets as it relates to, prior to me coming on, I saw the advertisement for natural gas. So I think that energy transition is essential to the future. But it's, as it relates to our portfolio, we view ESG considerations as part of our underwriting for every single investment. So it could be when we look at a real estate investment, we look at the carbon footprint of that property, because the total cost of ownership and the resale value may be higher for a building or for a property that is greener.